Welcome to my channel. I'm the cover call guy, and my goal is to create a $120,000 per year passive income portfolio using only cover call ETFs. Right now, my portfolio yields about $72,000 a year, about $6,000 a month, and about $1,400 a week, and almost $200 per day. Legal disclaimer before we start. This content is for informational and educational purpose only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risk, including loss of principal. Please always do your own research and consult a licensed professional before making any financial decisions. I'm just some random idiot you found online, and I could be completely wrong. Now, with that out the way, today's video is going to be on about how I'm trying to complement my Mag 7 um, stocks. All right, I'm trying to build a kind of like a core satellite position around my core Mag 7 stocks, or my Qs. You know, the Qs are all tech. So I've been looking, and I came across when I opened up my YouTube app. I came across the new Joe Rogan episode, and he had an interview with Jensen Hong, and I just finished watching it. It's about 2 hours and 30 minutes long. I finished it, and I was like, wow, what timing, right? I was literally looking to kind of complement the Mag 7, and here's this interview. So I watched it, and then I went ahead and continued my deep dive, and I came across ASGI. I know I only want to buy cover call ETFs to build out my $120,000 per year passive income portfolio, right? But ASGI is not a cover call ETF. It is a closed end fund. So if I can't find anything, if this is the best choice, I'm gonna be forced to obviously break my own rule because I can't find any other cover call ETF that would really supplement and do what this closed end fund does. So we're gonna get into it. This video is about building around $1 trillion companies. My Mag 7, right? The physical AI supercycle investment thesis is my thesis. So again, I could be wrong in this. And ticker symbol is ASGI from abrdn Global Infrastructure Income Fund. Is a closed-end fund, not a cover call ETF. All right, the paradigm shift. We always got to talk about this because I always want to start off with some type of introduction to why I've come across, why I put it on my watch list, why I buy it, why I sell. Right, brain versus body. The last decade was software eating the world, which is asset light. The next decade is AI eating the physical world, asset heavy. This is what I think is going to be happening next. I think this is the next shift in how we got to look at things and how we got to perceive where the money's like the actual core of where the money maker is, right? So the brain, Nvidia, OpenAI, Microsoft, all of Mag 7, right? The body, I think ASGI would be a very good pick for this. Basically, it's the electricity, the cooling, logistics, and copper required to keep the brain alive, right? So that's how I see it. And another word for this, ASGI is the pick and shovel proxy for the physical build out. Remember how the gold rush, right? The gold rush is the brain, the body is the shovel, right? You're selling shovel during a gold rush. That's how I'm seeing it. That's how I think. Like I want to play both sides, right? And if there is gold, then I get rich off of it because I have the Mag 7, right? If there is no gold, well, I've been selling shovels and people buying. I want to play both sides of it, you know. If there's gold, people are gonna keep buying shovels. If there's no gold, people will still buy shovels to try and find that gold elsewhere. All right, my macro thesis: the power bottleneck, 10 to 20x demand shock. Standard rack is 5 to 10 kilowatts. AI native rack Blackwell is 120 kilowatts. That means data centers are shifting from marginal consumers to dominant load drivers, right? Capacity is maxed out. If you guys read up on the news, a lot of people's bills, electricity bills, are rising because of these data centers. That means consumption, it can't handle it. The scaling needs to happen. And who else could help scale, right? The seller's market. Utilities with generation capacity now possess unprecedented pricing power. Hyperscalers are signing long term PPAs, locking in revenues for ASGI's holdings. So I think ASGI's, um, it could be their turn, right? They just need to have a foothold, and then they're gonna lock in and they're gonna dominate that sector. So I'm keeping a close eye on this. I'm trying to find a cover call ETF alternative that just matched, that also matches in terms of market share dominance, cash flow, and all that fun stuff. So if I can't find one, I will probably look into ASGI. All right, my macro thesis too, right? Thermodynamics. The thermal wall, which is every watt of electricity becomes heat. Air cooling is failing. This necessitates a wholesale architecture shift to liquid cooling, which just leads to industrial opportunity. ASGI's industrial sector is 30 to 40%, owns the engineering firms like Eton and building the CDUs and switch gears required to prevent the brain from melting. So I think they have a very strong hold, right? We always want to look at companies that kind of have a moat or does something so unique that other companies aren't really like able to kind of match and get a hold of the market share. So I think ASGI kind of has this space. Of course, there's multiple competitors, right? But I think ASGI is in a good spot to really take that leap forward. My macro thesis number 3, right? Hard assets. And the picture didn't load. Oh, why didn't it load? Okay. All right. I'll just explain it, right? Replacement cost mode. In an inflationary world, the cost to build new infrastructure skyrockets. Asset built 10 years ago are irreplaceable at original cost. The inflation protection is existing assets like pipelines, toll roads enjoy pricing power via inflation linked contracts. The result, ASGI owns the physical moat that new competitors cannot afford to replicate. So, this is where kind of like they kind of dominate, right? They have that stranglehold on certain areas, and they can only they're only going to expand, right? They're not going to succeed and give up the properties and assets they have. That would make no sense in a world where they need to hyperscale. They're going to probably be one of the few to actually take on more debt to expand and kind of get even a bigger market share. Right, fund structure deconstructed in the yield, 12% yield, managed distribution, analyze target on NAV. It has a 200% coverage ratio, about 23% total return versus a 12% payout for fiscal year 2024. Zero options sold. It is organic yield, no cap. Right, so not manufactured, yield guaranteed from dividends, harvesting gains, and active rotation. So on paper right now, it looks fairly good. It looks good. I think it's able to hold long term in this hyperscaling environment for AI, the Mag 7. Oh man, what's wrong with the photos here? Let me see if I can fix this. Yeah, I'm not sure why, but it's just a photo of chart explanation. It's just a picture essentially, right? So this is the portfolio, the AI core, right? Industrials 34%, utilities 28 to 32%, energy 8 to 10%, digital other. So it holds a pretty strong portfolio of needed, I guess, for the Mag 7 to kind of complement my Mag 7, right? It funds all of the Mag 7. Right, mapping the physical AI stack, right? So basically I'm explaining what they do, right? A layer of generation requirement, clean energy, row gigawatt for net zero. Um, the transport, they own the pipelines, gas for on-site power, the cooling, thermal management, prevention from overheating, and then the build, which is their shell, complex construction, they're able to build it. Logistic, they own that too. They requirement, transport, right, moving heavy HVAC units. So they kind of do everything here. They kind of like own a little bit of every single piece, which is why I think they're in a very very solid position um, to get these contract and win these contract, right? Mag 7 wants to scale, and they might end up winning these big contracts or get government funding, federal contracts, right? It doesn't have to be Mag 7, it can be federal contracts, government contracts, state contracts. So I think ASGI is in a very good position. I think it'll be one of the winners here. As I come along, other competitors and funds, I'll do more deep research on how maybe ASGI might be a might fall off because of this way, might do well because of this, but I think ASGI right now is in a very solid positions to really dominate. Right, strategy showdown, ASGI versus SPY I, right? I'm just comparing of the total return here. I'm just kind of showing you guys another solid cover call ETF pick, and it's not really like picking one or the other, one over the other. It's just showing you um, it can do as well as these great ETFs. So ASGI is uncapped, about a 23.33% total return versus SPY, which is capped at 20%, about 19% total return, right? So the delta difference here, ASGI owns the equity outright, no sold calls to cap the rally. When infrastructure stock re-rated, ASGI captured the full move. So this is just an example. I'm not saying SPY is bad, right? I love SPY, and I'm gonna eventually make SPY a core position in my portfolio too. I'm just letting you know, hey, look, this is one of the reasons why I think is another reason why it's dominant. Why I think it will be, the top dog. Right, private infrastructure, right? The illiquidity premium, ASGI invests 15 to 25% in private markets such as toll roads, renewable developers. These assets are not traded daily, offering yield premiums and valuation stability. Right, people are going to continue to drive. You're going to need those roads. Right, it needs to be fixed at all times. The price just keeps going up. You collect the dividends, you collect the payout. It's a win-win. The pop factor, NAV accreditation occurs from um, discrete milestones such as sales, reevaluations, and the private books, creating value uncorrelated to S&P 500. So whatever the market does, it doesn't matter. They will do their own thing, right? So it's another buffer in a way. Risk and valuation sensitivity, funds now trade at a premium about 1 to 3%, which is not bad at all. It's not bad at all. Z score is just about 2, indicates expensive versus history. Use dollar cost average. I don't think it's too bad at all right now. Again, of course, you're willing to pay for the premium for the hope that they win ththese contracts. Then it'll end up being really, really cheap. Rate sensitivity, right? Higher rates can compress utility valuations. The AI growth narrative is the key mitigant, right? So rates are being cut, but if rates doesn't get cut and it actually increases, then we have a slight issue here because they need the funding, they need to borrow, they need to win these contracts to scale. So rates, yes, that's another issue. You should always keep that in mind. Rates affect anything and everything. All right, my forward outlook, my 5 year plus, right? A fundamental of replumbing of the global energy grid. U.S. power demands to grow more in the next 5 years than the last 20. Right, utilities repricing as AI growth stock. Um, Durable tailwind for ASGI holdings. I think within the next 5 plus years, as AI has already taken a strong hold, right? I don't think it's going anywhere. In the next 5 years, it's only going to get better. People are going to keep using it. More people are going to get using it. There's more access to, more countries, and as small towns starts implementing, as the federal government and state government fully utilize it, we're going to need more power. We're going to need more electricity, everything. I think ASGI is in a very solid position here. If you know about this, let me know if you own it and you know about this already, because I've just found out about this actually. um I was doing a little deep dive, and I was just kind of um, looking around, and of course that YouTube video with the Joe Rogan and Jensen, and yeah, it was just good timing, and I just started digging about who was trying to build these infrastructure, these data center, and ASGI, which it just popped up. I feel like it's a little bit underrated, under the radar. Not maybe not underrated, but like under the radar in my opinion. It wasn't really mentioned, and I like to look at things that are under the radar, because those are typically the diamond hiding behind the actual. Everything else is all shiny, shiny, but I think ASGI may be like the shiniest rock that no one really noticed. So I could be wrong again. Let me know if you guys have other holdings that you guys think would perform better, does better. um, I haven't really come across a good supplement to back up the Mag 7 yet. In terms of like not Mag 7 related, right? Like Mag 7 would depend on someone like ASGI to scale out the physical world. Right, my verdict here, I'm not just buying yield, right? I'm buying the backbone of the entire AI revolution, right? ASGI is an institutional grade solution, right? Because they're building out for institutional, companies. These billion-dollar, companies, right? Is a derivative play on physics of AI owning the toll road, power plants, and cooling system that must exist for a digital economy to function. And that's why I think if I don't come across anything else, ASGI will be my pick. Obviously, now it's on my watch list. If it was on your watch list, let me know if I got anything wrong or right. I appreciate you guys fact checking me because it makes me a better investor, and I hope I've educated you and gave you some information. If you didn't know about ASGI, let me know. Is it a good pick? Do you think it's a bad pick? Thanks for watching. If you found any value in this deep dive, please support your channel, subscribe, like, comment, and yeah. ASGI was new to me, and if it wasn't new to you, I'd love to hear about it. Thanks for watching. Stay tuned. Catch you guys in the next.